ProShares Ultra Pro, short QQQ, SQQQ, slides 2.6% as NASDAQ 100 surges. What investors should know. April 6, 2025, New York. Shares of ProShares Ultra Pro, short QQQ, NASDAQ SQQQ, fell 2.6% on Friday, closing at 3645 as the NASDAQ 100 index extended its recent rally. The decline in SQQQ comes as no surprise to seasoned investors, given that the ETF is designed to deliver 3 times the inverse daily performance of the NASDAQ 100. SQQQ is one of the most actively traded leveraged inverse ETFs, commonly used by short-term traders to bet against technology-heavy stocks. When the NASDAQ 100 gains, SQQQ typically drops, and by a multiple of 3. The opposite is also true. The broader tech sector has shown strength in recent sessions, buoyed by optimism around AI-driven earnings, robust job data, and declining inflation fears. The NASDAQ 100 posted a solid gain on Friday, driven by surges in mega-cap stocks like Apple, AAPL, NVIDIA, NVDA, and Microsoft, MSFT. This bullish momentum has led to downward pressure on bearish leveraged ETFs like SQQQ, which are structured for daily trading strategies rather than long-term holding. While SQQQ and similar products offer the potential for amplified gains during market downturns, they are notoriously risky. These funds reset daily, meaning their performance can drift significantly from expected returns over time, especially in volatile markets. According to data from the Wall Street Journal, assets in leveraged ETFs grew by 51% year over year, reaching a record $134 billion. Despite their growing popularity, these products have been hit hard in 2025 amid a broad equity market rally. Many financial experts warn that these instruments are best suited for experienced traders with a deep understanding of market timing due to their volatility decay and compounding effects. The trajectory of SQQQ will largely depend on short-term moves in the NASDAQ 100. If the tech sector continues to rally, SQQQ may face further downside. However, any sharp pullback in growth stocks or broader economic concerns could see the ETF rebound just as quickly. For now, investors are advised to monitor key economic indicators, earnings reports, and interest rate expectations, all of which could influence the direction of tech stocks and, consequently, leveraged inverse ETFs like SQQQ. These instruments are best suited for experienced traders with a deep understanding of market timing, volatility decay, and compounding effects. Assets in leveraged ETFs have grown significantly, but they've faced challenges in the recent equity market rally. SQQQ's trajectory hinges on the NASDAQ 100's short-term movements. Continued tech sector rallies could mean further downside for SQQQ. However, any pullback in growth stocks or economic concerns could trigger a rebound. Stay informed. Monitor key economic indicators, earnings reports, and interest rate expectations. Subscribe for more market insights and analysis to make informed investment decisions.